another episode of the Bartos Group Premier Plus Realty virtual open house. Now, this one has a different twist. I'm Mary Bartos, your host of this great day, and I have these great agents with me, and John Camacho, who is behind the scenes. Hey to all of you. Today, we're going to do an investor, and we have the pleasure, I should say, an investor flavor of it, slant. And we have the pleasure to have Mike Skudnig on the phone and in video with us. He's not only a local investor, he's invested all over in Chicagoland before he moved down here in Florida, and he's going to tell you that story. But he's also a realtor on our team, so we're really delighted and blessed to have him join us. So Mike, I'm going to turn it over to you, and I want you to first talk about your background in investing.
Okay, well, I bought my first investment piece in 1986 in Chicago. So I've been doing it 34 years. I'm a third generation real estate investor. My grandparents on both sides and parents were also investors, and the 5 siblings in my family are all investors, and we've invested in 6 states, my biggest holding being Florida.
Right now. Now, I love hearing the story that you talk about investing in the Chicagoland versus investing down here in Florida.
The difference in return on investment?
Well, yes, the difference, and what makes this one maybe safer.
Yeah, so we can get a return on investment out of, let's say, a Chicago apartment building of let's say 15%, 20%, whereas a condo on Marco Island or in Southwest Florida in Naples or Marco Island, that might only be, let's say, 7 to 10%. And people are disappointed with the difference in return, but I tell them, look around me. You've got sunny skies, palm trees, et cetera, and I'm not going to get shot picking up the rent today, which might occur in Chicago.
I'm muted, sorry. I love it when you tell that story because I actually repeat that story, Mike, because there's a lot of investors that come down and they want that higher return on their investment. And they are a little disappointed down here. Now, Mike, in the last year, locally, roughly how many properties have you bought? Not to brag or anything.
I've purchased about 7 in the last year.
7 properties here in Marco Island. Is that where they have all been?
Well, that's where the 7 was purchased, but I have about 20 overall, 15 between Marco and Goodland.
Okay, that you still have holdings in. Now,
yeah.
I see you kind of walking around outside. Tell everybody a little bit about what you're walking in front of. So
my main holdings are condos on Marco, and I just left one building. You probably saw it in the background. That's Coquina Gardens. That has studios, 1 bedrooms, 2 bedrooms. Now I'm standing in front of Wexford Place. That's 1 bedrooms and 2 bedrooms. And then right across the street from Wexford Place is Marco Villa. And that is also 1 bedrooms and 2 bedrooms. I try to focus on the low end of the market. It's easier to get in, it's easier to get out, and it's easier to rent them out. My favorite is a studio. It's the least expensive. You only need 1 renter to fill it. It's easy to buy, it's easy to sell. And I like to refer to it as the bottom of the pyramid. The prices are at the bottom of the pyramid. That's the biggest part of the pyramid. So are my potential buyers if I ever had to sell, and so are my potential renters. That's the biggest field I can draw from. That's why I want to be at the bottom of the pyramid in all of those categories.
That is an interesting thought because you have invested in other types of properties here on Marco Island, right? And elsewhere, but in the past, like some seasonal rentals.
Yeah, I started on Marco in 98. Had never been here. A friend told me about it. I just built an apartment building in Chicago and sold it. And I had to roll the money into something. And he said, check out Marco Island. So I flew down, never having been here, looked at properties for 3 days, bought a condo on the beach and flew out. So that was 22 years ago. And at that time, I was mainly in vacation rentals. I owned 30 houses in 5 states that I managed personally doing vacation rentals. As time went on and I got married and had babies, my ability to fly all over the country and take care of properties was curtailed. So I basically converted everything into annuals, which are very easy to maintain. You only have to find one client a year as opposed to maybe 30, 40 clients a year for vacation rentals. But vacation rental is a very, very lucrative business.
Well, Mike, tell everybody what you did, you know, in the early days of your career before you were a realtor, because I do think that's valuable for people to know what you did and how you look at properties from your background.
Well, when I got out of college, I went down to the exchanges in Chicago. I started at the Chicago Board Options Exchange, then the Chicago Board of Trade, then the Chicago Mercantile Exchange. Ended up trading on all those exchanges and certainly learned about numbers more than I ever had in that business. Also learned about negotiating, because all you're doing all day long is negotiating. But then I took that knowledge and wanted a little bit simpler life with a good return on investment. So I applied it to the real estate market, purchased my first condo, as I mentioned, in '86 in the Gold Coast of downtown Chicago, and just kept going from there. Just kept buy a property, rent it out, buy the next one, rent it out, buy the next one, rent it out. I also would live in some of them so that I could buy them, live in them for a couple of years, sell them tax-free, or rent them out and go to the next one.
You know, that what you've done is short of amazing to amass wealth, and what you're doing here. John, I know that there's probably some questions that we have. Can you share those Facebook questions?
Sure. Actually, let me double check over here. But I would like to ask Mike a question directly. So at what age did you bought your first property, Mike?
In '86, I was 24.
And ever since, you have been basically repeating the same process, buying a property, renting the property, saving some money to buy the next one, and keep going like that.
Correct. And I had a lot of mentors. In fact, the impetus for saving the first one and renting it out is I called my accountant because I had some good profit in it. And I said, I'm going to sell it. And he's a landlord also. That's why I use him for all my accounting, because he's also in the business. He said, Mike, don't sell it, rent it out and go buy the next one. And I did that, and I just kept doing it. And I've been doing that for 34 years.
That's awesome.
We have one question here from Facebook, actually. They're asking, what was your main source of income before getting into investing in real estate?
I was a trader. I was a pit trader in Chicago, and then became an upstairs trader that managed teams.
Perfect. Perfect. Mary, do you have any question?
Yeah, there's a couple of questions on here that I'm seeing from Isabel. John, Mike, what's the ROI for a studio 1-bed? Can you cash flow with a mortgage, or do you even take mortgages?
You can cash flow with a mortgage. In fact, your return on investment is going to be greater if you get a mortgage. Your dollar income is going to be lower monthly because you have to make a mortgage payment, but your return is going to be higher. So let's take a 1-bedroom. This is Marco Villa behind me. We'll take a 1-bedroom in Marco Villa. You pay, let's say, $120,000 for it. You rent it out for $1,200 a month. After you take your HOA, your taxes, your insurance away from that, you're probably going to return about a 6 to 7%. If you leverage that with, say, a 25% down mortgage, that ROI, although smaller dollars coming out every month, that ROI is going to go to probably about a 10%. So it just depends on each individual and how they like to structure their buys, and that will determine your ROI. But basically like a 6 to a 10, 11, depending on whether you're doing cash or financing.
That's great. Now you just bought one recently and you sold it yesterday, right? You closed yesterday?
Yeah, so I had signed a contract prior to everything kind of getting a little crazier in the U.S. and the world, and actually had another opportunity come up in Chicago. So I basically cleaned the place, painted it, put it back on the market, and sold it in 3 days for a profit. So there is the ability to do that if you have the proper contractors and know how to do it. There are always some flipping opportunities. It was a small amount of money, but I still made money, and it still allowed me to go on to my next project in Chicago, which is going to be another apartment building that we're adding to the collection.
That's interesting. Talk a little bit about your group of, associates that you use to come in and do those things for you.
Well, having been a landlord on Marco for 22 years in Naples, you start to accumulate contractors. I've also built properties in Southwest Florida and Chicago and Indiana and Michigan. So I also know how to do a few handyman things, but for the most part, I have a set of contractors on the island and in Naples, and they're working for me almost every day. And when they're done working for the day, they get their money. So they know that they can always have work with Mike. They know that they're always going to get paid by Mike. And those are two very important things to keeping contractors happy and at your call.
Absolutely. I mean, some of the builders don't pay on time and they struggle to get their contractors in to do their projects. But with you paying cash on time immediately when they do it, people love that.
Yeah.
Are there some other questions that you're seeing on Facebook right now?
Yes. Hannah would like to know, is there a lot of demand for studio rentals on Marco Island?
Yeah, as I mentioned, the studios are the bottom of the pyramid, and they're the easiest to rent out because they're the lowest rent. A lot of the people who are looking for rentals on Marco Island at the lower end, they just want a roof over their head. So if you say, okay, I can give you a studio for $1,000, a 1-bedroom for $1,200, or a 2-bedroom for $1,500, they're going to go, I'll just take the studio. I don't have any families or anything like that rent for me in these smaller apartments. It's always like a single person who is either a restaurant worker, a hotel worker. I also have property managers that live in my condos. I've got a FedEx guy. I've got an electrician. It runs the gamut, but the studios are the easiest to rent out because of the lower price point.
Understood. We have another question from Lisa. Do you find that Southwest Florida investments appreciate more than your investments in other part of the country?
It depends on the timing of that investment. But for instance, the building I just walked past, Wexford Place, when I purchased my first 1-bedroom there in 2011, I paid $39,000.
What? In 2011, you paid $39,000?
I paid $39,000 for my first 1-bedroom in here. I paid $41,000 for my second 1-bedroom in here. The property that I just sold yesterday, I sold for $120,000. So from 11 to 2020, or about a 9-year stretch, property values, at least in this property, have tripled. Now our properties in Chicago in that same time frame have probably doubled. So there is a certain amount of higher demand for Southwest Florida because it's beautiful weather. Everyone's happy. You can see all the people going by me on bikes. Everyone's out walking and biking. In Chicago, my mother-in-law is shoveling the snow right
now. Coming from the Chicagoland myself, that is so not what I ever want to do again. Ever.
Right.
I want to go play in it, right? John,
Right.
do you have some other questions?
One question. What about Naples, Mike? Do you own any properties in Naples?
I have owned properties in Naples and built properties in Naples. Um, it's a great market. But I live on Marco because my wife is a teacher on Marco Island. My kids go to school on Marco Island. It's a lot easier for me to self-manage all these properties if they're all right around each other. Like for instance, as I mentioned, this building, which is Coquina, Wexford next to that, Marco Villa next to that. I've got 3 condominium complexes in a row that I own properties in. I'm also on the board of directors of all 3. It's a lot easier for me to manage all these than it is to be spread out all over Naples. But there's great investment opportunities in Naples. There's a ton of duplexes and triplexes, quads, and apartment buildings in Naples that have good return, anywhere from, let's say, an 8 to 11% return.
Perfect.
And on that,
And
go ahead, John.
yeah, one last question. Mike, you mentioned the great deal that you got on that apartment back in 2011. Was that price because of the negotiation, or was a fair price in the market back in the days?
It was both. Basically, that was a foreclosure. It had already foreclosed and was now an REO listed with an agent. So I did negotiate with the bank to get that price. I think it was priced at around 45. And then the next one I bought, the one for 41, that was also priced around 45. Same agent, also an REO foreclosed property. The one that I bought for 39 was foreclosed on a guy who had paid 200 for it. So just to give you some perspective,
Wow.
it went from 200 to 39, and now it's 120, roughly.
Well, it went up so much, obviously from that perspective, because that's what was happening down here. Things were doubling in a few days. It felt like, and maybe elsewhere in the country. But, you bring up a good point, Mike. Some investors think that foreclosures is the way to go. Can you speak to foreclosures and what that looks like from your perspective?
Myself and my team in Illinois and Indiana did foreclosures for probably a decade. And if you do it full time, it's a great business. But trying to do it part time is like trying to fly a plane part time. It just doesn't work out well. It's a lot of work. You don't get everyone you go after. So you might do research on 20 properties, but only get one of them. For me, it's easier to let them go back to the bank and buy it as an REO from an agent after it's listed on the market for sale. Then it's not a moving target. I can make an offer, get it accepted. I don't have to worry about doing research or title work or anything like that. Where on a foreclosed property, the foreclosure could go on for years, and now you've wasted years of your time chasing something, and you may not get it at the auction. So I would rather not have a moving target. I'd rather have something where, okay, here it is, Mike. It's for sale. It's listed. This is the price. Do you want it? Yes, I buy it.
Well said. Those people that want to have it, you go into the courthouse steps and buy it. As you just said, you may get 1 in 20, 1 in 100. John, are there other questions? Because I'm seeing them come in, pretty heavy right now.
Yes, we have questions. John would like to know, is there a sweet spot rental for Southwest Florida for both rent and location?
Could you say that again? I'm sorry.
Yeah, John would like to know if there's a sweet spot rental in Southwest Florida in particular.
Well, I think the sweet spot is the studio market. Again, it's the least expensive market to get into. It's the easiest one to rent out because of the price point on the rent. It's going to be the lowest rent, the lowest purchase price. And if you ever had to sell or wanted to sell, it's the easiest to sell because it's the lowest price. And you're going to get a little bit higher ROI on that, a little bit higher return on investment because the purchase price is so low and studios also have the lowest taxes, the lowest HOA fees. All of those things put together give you a higher ROI. Although I do have one bedrooms, my focus is studios. That's the best return.
It's the best return. Perfect. Ashley is asking, can you talk more about how to roll capital from one investment property into purchasing the next?
Okay, so I'm actually doing that right now. So I've got several condos with very low or no debt on them. I see that we may have some nice opportunities coming up in the market. And so I want to be cash heavy. So I'm basically drawing credit lines and mortgage lines out of the properties that have little or no financing on them. And then I'm using that money, which is probably anywhere from 3 to 4% money, which to me is nothing. My first mortgage was 9%. I think my second mortgage was 13% when I started out. So, but anyways, I take that money, 3 or 4% money, and I invest it, and I get anywhere from, let's say, a 7 to 10% return. So that difference is what I'm trying to extract when I'm drawing down off of properties and putting it into other properties. And if you can do that, if you have good credit and you have a good financial institution to work with, it's easily done.
Well said. You know, Mike, we're going to segue here into some seasonal properties. Now, you've been talking a lot about annual properties and that niche that you're in right now. There are, you know, seasonal properties where people are getting into that rental. They want to use it for themselves a little bit. You know, maybe not a heavy investor, maybe not looking at a huge capitalization rate, but they want to use it for themselves. Can you talk about that as we think about segueing into a couple of properties to show some examples?
Sure. So most of my clients are investors, and they run the gamut as to their investment goals. People who are buying the studios with me and the one bedrooms with me, those are people who just want to park money and get a straight return. There's other people who want to buy a little place in Florida so that they can have a place to get away to. But when they're not there, they want to rent it out to either cover their expenses or make a little bit of money. And Marco is a great spot for that. There are a few shorter term rental places up in Naples, but Marco has a lot of them where you could buy a condo on the beach, which is what I did in 1998. I bought a condo on the beach. I used it when I wanted to use it and rented it out the rest of the time. The problem is it was rented so much I couldn't use it. So I had to buy another one and then another one and another one.
I love that about you. I bought my first one in about 2000, same building that you were in, right? Rented it out all the time, got to use it a little bit, but bankrolled the money into a single family home here because I moved here 3 years later. So, you know, everybody's got their own investment goals, like you said. Well, why don't we do this, John? Why don't we segue into, Mike, do you want to go sit in your car somewhere where it's a little cooler because you're in a long sleeve shirt?
Yeah.
Probably sweating to death. Don't go anywhere.
Now hitting about 90 degrees, so I'm going to jump into my car.
Yeah, don't go anywhere. We're going to come back to you for questions and commentary. But